What did happen when the market fell apart a week ago? Why is everything so opaque? Simple. Nobody in this business is required to talk about how they blew it, how they simply didn't know what they were doing and lost a lot of money and caused your portfolio to get hammered as collateral damage. That's how we ended up with the disaster we had last week and the ensuing comeback we had last Thursday. When you get a sell-off, you always try to figure out what's really at stake. What's gone wrong? If you go back to 1 week ago when the Japanese market fell apart, we saw most of our big cap stocks fall apart with it. We witnessed the collapse of the small cap trade. We fretted over the sudden decline in the financials. It's always interesting to watch the process of the decline unfold if you can do it clinically. It began with an examination of the bond market. We saw a dramatic decline in yields. We couldn't get a straight story, so journalists, after speaking to their sources, claimed that our economy was headed for a hard landing. Of course, that was totally false. The big buyers of treasuries were related to the Japanese meltdown, nothing more. The huge tech sell-off, we heard all about how AI had been defrocked at last and companies buying mountains of chips from NVIDIA were all marks. The rumor that NVIDIA's new high-end chips were running late became common parlance to the point where we decided that the whole companies are being set back by the product's lateness. NVIDIA became the goat of the game. That whole anti-tech thesis still lingers, but here comes NVIDIA jumping 4% today. All very positive UBS piece that said the whole Blackwell disaster turns out to be much ado about nothing. In short, there's nothing new at all here. And even if there were, the company's current iterations of high-end chips, the H200, can fill in the gap. Now, look, I fully expect the stock to get hit again tomorrow. Many of its holders know little about the company. They really, I mean, they just tell you they love it. But it was a huge buy a week and 10 points ago. The banks, we tried to blame the decline on commercial real estate woes, but that turned out to be a tough sell, given that tons of people have come back to work 5 days a week, making the Class A office buildings pretty valuable again. Yes, there are plenty of out-of-date buildings that are for sale, but it looks like the woes are manageable. Obviously, the bank stocks are still down. I think they represent real value here. The small caps are trying to come back, but there's a big issue here. It turns out that the small cap trade was really hard to unwind without pressuring the stocks because no one actually bought the stocks. They bought the ETFs and buyers inundated with stock walked away when the sellers came out of the woodwork on Tuesday. Is the trade done? The buyers will nibble. But we now know that it's easier to get out of the small caps than it is to get out. I mean, it's easy to get in and get out. And I've got to tell you, a lot of this stuff is not done. That is still unwinding. Now, let's go back to the Japan problem. We keep hearing that there was this great unwind of the yen carry trade. But that's authentic Wall Street gibberish. The reality is that a bunch of money managers took advantage of how you could borrow against Japanese bonds, which had a very low interest rate, and then have relatively free money, which you could then put to work in stocks all around the globe, including here. The managers who did this trade, and it was many different firms, didn't anticipate that the long dormant Bank of Japan would wake up and put through 2 rapid-fire rate hikes. They own a lot of stocks around the world, and they had to sell because they were playing with cheap money that suddenly became a lot more expensive. And that caused a sell-off, no more, no less. Now, if we'd known who these ill-advised managers were and how big their positions were, then that would have been the story, as opposed to all the bogus pin the tail on the sell-off headlines we got last week. Of course, that doesn't happen because secrecy is everything on Wall Street. These clients' names were protected, but if their story had been written, everyone would have had a different attitude toward last week's decline. We've had so many sell-offs based on mistaken strategies by large institutions that forced journalists and commentators to create bogus alibis explaining why the market's going down. Their tortured analysis could be avoided if we knew the identities of the ne'er-do-well funds, along with their strategies, their leverage, their destruction. We can't do that, though. We can't find out the names, but let's remember last Monday's sell-off and consider that it might have been about nothing more than flailing money managers, which is often the case with these big market meltdowns. Like I said, as always, a bull market summary. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.